Hello, everybody. I'm Matthew Denny, partner at Bevan Buckland LLP, and today I'm joined by Robert Perrin.
Hello, everybody. Mine's Rob Perrin. I'm the VAT expert for Bevan and Buckland LLP.
Thanks, Rob. And today we're going to try and shine some light on the reverse charge in the construction industry. So, Rob, let's start off with who's going to be impacted by this. Which businesses need to look out for the reverse charge rules?
Right. The businesses that are impacted are basically those businesses that are VAT registered, and they're also registered under the CIS scheme. So as long as if you have both of those, then you will be impacted by this reverse charge.
Okay, so it's pretty clear. If you're outside of either of those, you're not going to need to worry about this. If you are, then presumably you're watching this webinar. Rob, when these changes come in, because I thought they were meant to have come in ages ago.
Yes, they were supposed to come in October 19, but due to Brexit, they were delayed. They were supposed to then have started in October 2020, but again, because of coronavirus, they were delayed until the 1st of March 2021. HMRC haven't made any comments about delaying it any further, so I think we can assume that it will go ahead from the 1st of March.
And everyone's going to ask, do you think possibly they might delay it again? Any rumours?
I haven't seen any rumours, and I think if they were going to delay it, they would have mentioned it by now, considering it is coming towards the end of February. So I can't see it being delayed.
So probably best everyone gets prepared and understands these rules. Rob, why are we having these changes? It doesn't actually change the amount of VAT that gets paid. So why do we need to move the burden of the liability in this reverse charge?
The main reason HMRC give for the changes is to stop fraud. Basically, in the past, they have seen subcontractors and that who are VAT registered and charge VAT actually not passing that VAT back to HMRC and basically disappearing with it. So as usual, unfortunately, HMRC always tend to target the construction industry. So this is why they brought in the reverse charge system, mainly to prevent fraud.
So you could say it's an extension of the CIS scheme, and it's targeted at the construction industry again. So we've got a slide here, Rob, on the services that will be affected by the reverse charge. So I can see that that makes sense. If you're making a supply that consists of construction services and materials, as you'd expect, you've got to look at the reverse charge. What if you're just supplying materials? Would it apply then, Rob?
No, it doesn't apply to materials on their own. For argument's sake, if you're a builder's merchant supplying subcontractors and building firms, then you would normally charge VAT. It only applies to services and materials.
Where they're supplied together.
Yes, I mean the main construction work that is included is sort of like site preparation, laying the foundations, providing access works, demolition, dismantling, building works, alterations, repairs and decorating, installing heating systems, light power. Those sort of things tend to come under the construction services. So, excuse me, if you are within one of those sub areas, it's more than likely that the reverse charge will apply to you.
And so the second point here is that, as you might expect, well, there's got to be some VAT to be charged. So standard rated is, as you'd expect, standard rated supplies. Reduced rate, so that, Rob, that would be things like the 5% reduced rating.
Yes, which you sometimes have on sort of barn conversions or something like that. Now, it only applies to standard rate and reduced rate VAT. So if you are working on a construction site that's building domestic properties, houses, then your services will normally be zero rated, and therefore the reverse charge doesn't apply because you're actually not charging any VAT on your services anyway.
It would be quite difficult to reverse charge a zero rated VAT supply.
Yeah.
The next one, sort of, I suppose they speak for themselves, don't they? It's got to be between two UK VAT registered businesses, or it just wouldn't work.
That's right. Yes.
And as it says there, both the supplier and the customer are also registered for CIS. This next one, the customer intends to make an ongoing supply of construction services to another party. So essentially, does that mean that we're not the end user?
Yes, it's the reverse charge only applies if you are going to be providing construction services to another organization or business. And this is what they call as the end user. An end user will be somebody who is basically a person or a company that is not going to be supplying any services onwards. Say, for argument's sake, it could be a property investment company that's having an office block built, and that office block is going to be let out. So they are the end user. So their, say, construction company who's doing all the work for them would actually be charging them VAT. And that construction company would not be an end user because they are providing construction services to the property investment company. And
I see. You could sort of think of it as far as the revenue is concerned, you've almost got to the top of the supply chain when you get to the main contractor. It's a bit like the revenue saying, well, we trust that person to do the right to pay over the VAT.
Yes, that's correct. Yes.
And I suppose the last one speaks for itself. The supplier and customer are not connected.
Yes.
I guess there would be no benefit to doing it between connected parties.
No, they wouldn't. No.
So we've just gone through the supplies that will be caught, and now we've got a slide on those services that will not be affected. So if we go through these, as we've touched on the first one, the supplies of zero and exempt construction services, because there is no VAT being charged, and you've explained zero rating could be residential.
Yes, that's right.
What the second one, supplies that are not covered by the CIS unless linked to such a supply. What sort of examples might they be, Rob?
Right. Supplies that are not covered by CIS tend to be sort of architectural and surveying services. Scaffolding hire with no labour would be an example. It would be linked to a construction industry or a construction, but it's actually doesn't fall within the CIS rules. Like architects, they will draw up the drawings for the building, but they will charge normal VAT on their services, and they are not within the CIS scheme. So therefore, they would just charge VAT on their services as normal, and they're not subject to the reverse charge.
Okay, that's helpful. And the next one, supplies of staff or workers, presumably that's if you're an agency providing construction workers, yes, that sort of thing.
That's correct, yes.
And then subsequently, we've got this CIS reverse charge does not apply to taxable supplies made to the following customers. I suppose they are, no, it couldn't be applied to a non-VAT registered customer. We've touched on the second bullet, the end users.
Yes.
So it's not intended.
With regard to a non-VAT registered customer, you can think of that as doing some work on somebody's property, a house, for argument's sake. Say you were building a conservatory on an existing house, you wouldn't fall within the reverse charge, even though you would charge VAT on your services. In that instance, you wouldn't reverse charge because, first of all, the individual owns the property would not normally be VAT registered, and also they actually would be an end user as well. So that's an example of a non-VAT registered customer.
Because it would be completely impractical to require people that were not VAT registered and understanding of the VAT compliance rules to operate such a charge.
That's right.
You touched on end users. What about this one here, the last one? So intermediary suppliers who are connected, e.g., so the key here is the connection. So that's the example there, landlord and tenant, or I suppose in that aspect, so there's just no point. It doesn't serve to stop fraud if we've got connected parties.
That's right. Yes, that's it.
Okay. So I'll move on to the next slide. So there's quite a lot of detail on here, but so what we're looking at here is how the changes are practically going to impact people. So currently we have a situation where you get the VAT invoice and you pay over the VAT inclusive amount, and if you're able to, you then on your VAT return recover your VAT as input VAT. You sort of suffer the cash flow disadvantage of that if you can indeed recover your input VAT, but clearly it's going to operate differently now. So if we can go through this and try and explain how it'll be different. So start with the first one, the first bullet point.
Yeah, well, basically what is happening here is it looks more detailed than it is. Effectively, what we're saying there is that as a supplier, you would normally charge VAT on your invoice, but under the reverse charge, you will not include any VAT on your invoice, and the requirement is that you include all the normal information for a VAT invoice on your invoice. However, if the service falls within the CIS VAT reverse charge, you have to make a note on the invoice that it does fall under the reverse charge measures. And normally you would have to say what VAT rate would apply to your services, and also you can include how much VAT would normally apply, but obviously you're not charging that VAT. This is the reason for this is that your customer will then note that on it the supply is a reverse charge invoice, and they then will account for that within their VAT records by basically charging. If I give an example, and there's an example following this actually, which will help when you explain with regard to the customer. They have to, if they say the invoice was for £10,000, normally they would be charged £2,000 worth of VAT. In this instance, they would not have any VAT, so all they would get invoiced by the subcontractor would be £10,000. They would pay that £10,000 to the subcontractor. But from a VAT point of view, the customer would then account for £2,000 worth of VAT as output VAT, as it was like a sale. But then they would also account for £2,000 worth of input VAT as if it was a purchase, and therefore the two tend to cancel each other out.
Okay, so if I take your example of an invoice of £10,000, so that the obligation still falls on the supplier of services to say what the VAT would be.
Yes,
so if it was a reduced rated supply at 5%, it would need the invoice would have the VAT registration number. It would have the invoice amount, presumably some supplier description of the services being supplied, and it would note in that instance that of the £500 of VAT, but that would not be paid across, and it would be dealt with under the reverse charge by the individual or company receiving the supply.
That's correct. Yes.
Well, let's move on to the sort of a simple example just to make it very clear. So Rob, I got here. This is just our typical structure. So Tom's a developer. He's got a main contractor, Sam, and Sam is subcontracted, let's say, some electrical works to Rich. And what we're going to look at is this has got sort of our current position. This is what we're used to. And in this example, we've got Sam subcontracting £100,000 of, let's say, electrical works to Rich. And the issue we could have is that Rich could charge the 120, and he's kind of the bottom of this supply chain, and if he was not to hand over his £20,000 of VAT to HMRC, Sam is still entitled to recover that input VAT on his VAT return, because he's properly accounted for it and received a VAT invoice. It's not his fault that Rich has failed to pay it over, and that's kind of that's what they don't like.
Yes, I mean, one of the other points with regard to this, and I think it's on the previous slide, is the cash flow issues that this does bring up. I think, sorry, the previous one to that again.
Well, we can go through that. Let's go through that. So we've got. Yes. So what you're talking about here is Sam. He's paid Rich £120,000, and let's say he's on 30-day terms, or let's say Rich is going to walk off site if he doesn't receive the money because he needs to pay his workers. So Sam might have paid Rich the £120,000, but it could be some time before Sam can reclaim the £20,000 of input tax on his quarterly VAT return. Yeah. So Sam is, in this example, is at a cash flow disadvantage, and Rich, if he's paid on a sort of a timely basis, could be at a cash flow advantage.
Yes, that's correct. And that's the situation pre 1st of March 2021.
So if I move to the next slide, so the same structure, it's the same £100,000. So now what you're saying is that Sam, so Rich will still invoice Sam, and he will still invoice him the 100, and he will refer to the amount of VAT and the rate of VAT. But Sam will in fact only pay to Rich the 100.
Yeah.
And Sam will then account for the reverse charge as both input VAT and how's it work? So he's going to account for the input VAT on his own return as normal.
And output VAT. So you have effectively a £20,000 output VAT in Sam's VAT return, and he'll also have £20,000 worth of input VAT in his return. So the two cancel themselves out on his VAT return, but the impact on that is that Sam is effectively paying over the £20,000 to HMRC. Because if you look at on the previous slide, Sam would have actually recovered £20,000 from HMRC, and Rich would have had to pay the £20,000 to HMRC. So what's happening now from the 1st of March is that Sam is the one that's effectively paying it and receiving it from HMRC, and therefore the payment of the VAT over to HMRC is taken out of Rich's hands completely. So
and that presumably goes up the supply chain. So if we had another transaction here,
yeah, that's right.
So we push the obligation to pay as the amounts get larger, presumably up the supply chain. We move the obligation to account for the VAT to what HMRC would consider, I suppose, to be sort of more larger, I suppose, more trustworthy businesses.
Yeah, that's correct.
So things to take care of. Yeah, so there are some VAT schemes that I suppose I'm not sure how much thought would have been given to these when coming up with the reverse charge. Presumably they're not going to be the easiest things to work with if you've got to operate the reverse charge, and you possibly be aware of the repercussions. So how might it affect you if you're on cash accounting?
Well, in effect, I mean, you normally only recover VAT or pay the VAT over to HMRC or account for it when you actually receive the money for your invoice. So in the previous example, if Rich was on cash accounting, he would only account for the £20,000 when he received the money from Sam. Yes, that's right, Sam. Now, the issue is that if it was Sam on cash accounting, he would again have to pay Rich the 120,000. So again, at that point, he can claim it back.
So it's not ideal. It's not ideal being on cash.
It's not, because it's the timing of things, and it's the cash flow advantage, because obviously the cash flow advantage is now shifting from, in this case, the subcontractor being Rich to Sam, because Sam now is the one that's getting the cash flow advantage because he's not having to pay the whole 120,000 over to Rich. But Rich now is only receiving 100,000 and he's down 20,000, which he could have used for his own cash flow until the point where he had to pay it over to HMRC. So these are the issues that we need to think about. It does impact on cash flow mainly, and the VAT schemes, the cash accounting is one of the ones that is impacted, and the flat rate scheme is another one, as you can see, which
I can see that one must be even more difficult. So they just don't compute together.
No, that's right. It just doesn't work, because normally with a flat rate scheme, you just charge a certain percentage on your turnover, which then accounts for your input VAT and your output VAT. But now with the reverse charge, you're actually not charging any output VAT. So if you think about it, if you use a flat rate scheme, you actually haven't got any output VAT, but you are actually paying some output VAT over to HMRC under the flat rate scheme. So you're
probably disadvantaged. So if you're on a flat rate scheme, you probably want to you may want to look at it and possibly come off the flat rate scheme altogether.
Yeah.
Yeah. Okay. So Rob, thank you for that. So I suspect there's going to be some people with some questions.
Yes.
They may contact you. That's
Please
great.
Please email me or give me a call.
Your contact details are there. So I think we can wrap it up there, Rob. Thank you very much for your time.
No, my pleasure.